Hey everyone, and welcome. Today, we are diving deep into one of the most powerful tools a trader has, the MACD indicator. But look, we're not just going over the basics here. We're talking about recalibrating it, fine-tuning it for the lightning-fast world of day trading. If you've ever felt like your trading compass is just a little off, then you are in exactly the right place. Let's get it dialed in. So let me ask you something. Have you ever spotted that perfect setup? You're watching the chart, you see the MACD line just slowly crawling towards a crossover. And by the time it finally gives you the signal to get in, the best part of the move is already gone. Ugh. It's such a classic problem, and you know what? It's probably not your fault. It's your settings. And this right here, this really shows you the fundamental disconnect. On one side, you've got the default MACD settings, 12, 26, and 9. Now, these were literally designed for slow, weekly charts, which means they lag badly in today's fast markets. And on the other side, that's what a day trader actually needs: speed, sensitivity, and way less lag so you can catch those moves the second they start. Which brings us right to our first big point, what I call the default setting trap. Almost every trading platform just hands you the MACD with these standard settings, and it's so easy to just assume, hey, they must be the best, right? But for day trading, they're a trap that can keep you constantly one step behind the market. Okay, so before we can fix it, we gotta know what we're working with. Real quick, the MACD has three key parts. First, you have the MACD line. Think of this as the engine. It shows you the momentum. Second, you've got the signal line, and that's kind of like your trigger for a trade. And finally, there's the histogram, which shows you the strength of that momentum. Getting how these three dance together, that's the whole key. So here's the absolute kicker. The guy who created the MACD, Gerald Apple, he designed the 12-26-9 settings way back in the 1970s, and he built them for a very specific purpose: analyzing long-term trends on weekly charts. He wasn't thinking about 5-minute charts or scalping Forex. He was literally using a completely different map than we are today. And here's a great way to think about it. Using the default settings for day trading, it's like trying to spot a distant planet with a magnifying glass. You're just too close, too slow. Optimized settings, though, they're like a powerful telescope, giving you the clarity to see those big, fast-moving opportunities from a mile away. So how do we get our hands on that telescope? Well, that leads us perfectly into our second section, unlocking faster MACD settings. It's time to stop just accepting the default and start actively recalibrating our tools for the speed and precision that we need. You know, the secret here is incredibly simple, but it is a total game changer. For day trading, you just need to think faster. That's it. Using shorter periods for your moving averages creates more sensitive signals. Our whole goal is to find that sweet spot, right? Where we get timely signals without getting completely overwhelmed by all the market noise. All right, this is good stuff, the core of what we're talking about today. Let's look at three really powerful alternatives. First up, the 5-35-5 setting, which I like to call the speed demon. This is perfect for scalping on those super short 1 to 5 minute charts. It gives you ultra-fast signals, but here's the catch. You're going to get a higher number of false positives. Next, we've got 8-17-9, the balanced approach. Honestly, this is the sweet spot for most day traders on 5 to 15-minute charts. It offers really good signal quality with a manageable amount of lag. And for you experts out there, there's the 3-10-16, the precision play. This thing offers maximum sensitivity, but it really does require some experience to read it correctly. But hold on, it's not enough to just pick a fast setting and use it on everything. A real pro tailors their tools to the specific job. So this section is all about building your own custom playbook because, let's face it, a volatile crypto coin behaves very, very differently than a stable blue chip stock. So here's your starting playbook, your cheat sheet. For those high beta stocks, you know, the ones that are way more volatile like a Tesla, you want the speed demon, that 5-35-5 setting. For the more stable blue chip stocks like Apple, that balanced 8-17-9 is just perfect. In the Forex world, that same 8-17-9 is great for the major pairs, but if you're trading less common exotic pairs, the slower 12-26-9 actually helps filter out some of that choppy noise. And for the wild west of crypto, you need maximum speed, so go with either the 3-10-16 or the 5-35-5. Okay, so once you get your settings dialed in, we can start to move beyond just looking for simple crossovers. The real money, the real edge, is made by reading the deeper signals that the MACD is giving you. This is where you really level up. This quote just nails the whole concept of divergence. I want you to picture this. The price on your chart is pushing up, making new highs. Everyone's getting super bullish. But your MACD indicator, down below, is quietly making lower highs. It's telling you the momentum underneath is fading. That is a powerful, powerful warning that a reversal could be right around the corner. And guess what? It works the other way too, and it's just as powerful. It's called a bullish divergence. This happens when the price on your chart makes a new low, but your MACD indicator actually makes a higher low. This is an A-plus setup that suggests all that downside momentum is drying up and the bulls are getting ready to take back control. So how do you actually trade this thing? It's a pretty simple three-step process. Step 1, you spot those higher lows on your MACD indicator. Step 2, you look up and confirm you see corresponding lower lows on the price chart. And step 3, you wait for the price action itself to confirm the reversal is happening, and then you look for your entry. It's seriously one of the most reliable patterns you can learn. So we've covered faster settings. We've covered advanced signals like divergence. Now it's time to bring it all together and talk about finding your personal sweet spot. This is all about that crucial balance between the speed of your signals and their accuracy. Now check out this chart because it lays out the trade-off perfectly. That super fast 535.5 setting, yeah, it gives you a ton of trades, but the win rate is hanging around 52%. Now the slow default 12.26.9, it gives you way fewer trades, but it has a higher win rate of 62%. And that balanced 8.17.9 setting right in the middle, it hits that sweet spot with a really solid 58% win rate and a good number of trades. For most day traders, this consistently provides the best risk-adjusted returns. So if you're sitting there wondering, okay, this is great, but where do I even start? Here it is. The 8.17.9 setting on a 5-minute chart. This is the best all-around starting point for the vast majority of day traders. It's fast enough to catch those intraday moves, but it's stable enough to filter out the worst of the market noise. Start here, and then you can adjust based on what you trade and your personal style. But I want you to listen to this, because this might be the most important takeaway of all. The technically perfect setting is absolutely useless if it doesn't fit your trading psychology. If having ultra-fast signals flashing all day stresses you out and causes you to make bad decisions, then it's not for you. Finding a setup that you can execute with discipline day in and day out is so much more important. Remember this, consistency will always be perfection. And with that, you now have the complete toolkit to properly calibrate your trading compass. You get the why, the what, and the how. So the only question left is the one you see right here. Which setting are you going to go and test first? The speed demon, the balanced approach, or the precision play? The choice is yours.